evening, ladies and gentlemen. A very warm welcome to Mint's 5th annual banking conference on Global Turmoil Impact on Indian Banking. I don't need to introduce any one of them. I don't want to waste time, but just to give a sense of how big is today's conference and who are they. We have three Indian banks with the largest in market capitalization in across the banking world in India. You know, I have been discussing with people about the subject that global turmoil and impact on Indian banking. Most of the bankers say, hey, what did you say, global turmoil? Yes, but impact on Indian banking? No. Where is the impact? Because we have a very competent and conservative regulator. And our banks has no problem. In terms of liquidity, they don't have any problem. In terms of capital, they don't have any problem. So what? So then I quietly tell them, what about non-performing assets? That's also a global impact because economic slowing and all. Gentleman sitting to my left, I'm sorry, you would not like me to say that. His gross non-performing asset is inching towards 5%. Of course, other HDFC and ICICI and Mr. Malia is a pretty healthy situation. So that's one situation we can discuss. So we'll start with the NPA problem, and I'll start with you, Chanda. Contrary to perceptions, your bank actually showing that you have been managing it well, managing in the positive sense. NPA is not going up. Now, when there's economic slowdown and when there's a large-scale restructuring, but here is one bank, ICICI, which has actually been doing a fantastic job. Could you share your experience? Do you have any issue with the global turmoil, or is business as usual? How are you doing this?
See, I think when you look at the Indian economy and then you look at how the NPAs are performing, in a way there is a correlation. If you know the Indian economy, the most resilient part of it is the domestic consumption, and therefore we are seeing that on the retail side, at least the NPA levels are very stable. The credit performance on housing loans, car loans, etc. is very, very stable. When it comes to large corporates, I think more than just brushing it as a sector issue or an issue related to global turmoil, I think we do realize that there are some corporates which are highly leveraged. So I think the highly leveraged corporates today, or those corporates which are probably facing some issues in project implementations or delays in project implementations or last mile clearances, are the ones who would need some amount of hand-holding for some time. So I think that is where you are seeing an increase in restructured assets in general. On the SME side, the third part of the banking assets, I think the experience has been mixed across banks. Some sectors in the SME business which have really got impacted due to global turmoil, that is, which were very heavily export oriented. I think there are some issues. But on the other hand, those that were really relying on the domestic economy and the growth in the domestic economy are actually able to perform well. So I think the experience across retail, large corporate and SME sectors has been very different, and therefore the impact on every bank is very different depending on the composition of the portfolio of every bank.
Pramit, I was going through the numbers. Among the foreign banks, you are relatively better off when it comes to quality of assets.
I think, Tamal, as Chanda said, it's really a consequence of two or three things. I mean, one is if you look at or participate in sectors that are affected by a little bit of the economic down cycle. The second, of course, is if you are in sectors which have extraneous, unforeseen circumstances that affect you. And I think the third is, which is a little bit of what you would describe as, non-discriminate or indiscriminate lending, where your underwriting or lending standards fall. And our own experience over about 6 or 7 years ago, as far as retail banking was concerned, was that you really suffered because of indiscriminate lending. So I think to the extent there has been over the last 3 or 4 years some amount of indiscriminate lending, I think yes, there is a lot of noise in the system around NPAs, but the next 2 or 3 quarters, I think some of that will come to the surface.
Indiscriminate lending, Mr. Malia, you were a very conservative banker and managed to keep your NPA, net NPA level continue to be less than 1%. So tell us, what's your experience?
See, when the overall economy, there is a deceleration of growth it is but natural that there would be some stresses as far as the asset quality is concerned. That is what we have been seeing in the recent past in the Indian context. But then having said that, we should also acknowledge the fact that overall the Indian banking system has performed very well. To say that overall gross NPA levels of less than 3% or maybe net NPA levels of around 1.25% for the system, I don't think is a bad performance in terms of the overall performance. Even the gross NPA levels, if it increases from the present level of around 3% to 4%, that's what the Fitch people were talking about, I think still it could be a reasonably good performance. And with the economy bouncing back, I think the overall asset quality concern should be removed from our mind as we move along.
Stuart Davis, let me hear you have been here now 3 years in India.
Yes, that's right.
Yeah, and you are one of those rare expats who took very little time to understand the intricacies of banking business in India. So tell us what's the overall scenario and in general and also your own books.
I think India has two things which is in some respects. One is that growth is still high, 7-8% growth. And that level of growth means that, that companies who hit some difficulties are able to recover well. If we had levels of growth that we're seeing in the UK and Europe at the present time, I would think that you could see the NPA levels here in India rise to quite significant levels. So that will always be a buffer here. Probably on the flip side, something which concerns me, and the Deputy Governor touched on it in his speech, and that is the percentage that is actually recovered from non-performing advances. It's actually quite low here. And I think from a regulatory or policy perspective, I think work needs to be done on protecting lenders and making the recovery process simpler and more effective than what we have at the present time. And I think if that occurred, then I would think we'd see that percentage of recoveries increase higher.
Okay. Mr. Puri, your NPA level is, it's very boring and monotonous, the same, come what may in the economy, you will never move beyond 20 basis point, right? Your net NPA, I think last 3 quarters continue to be 20 basis point. So how do you manage it? This is quote unquote. How do you manage it?
Okay, firstly, I presume that's a compliment, so I'll thank you. But if we step back a bit, let's understand when the economy slows down, yes, there will be an increase in NPAs. But for Christ's sake, how much is the slowdown? This is not a major slowdown that leads to an explosion of NPAs. So you have over a 2-year period the economy coming from about 8.25 to 7%. That's not the end of the world. So will you see some slight increase? Yes. And that's what we saw. Most importantly, we don't have toxic assets and we don't have over-leveraged governments and over-leveraged individuals. So I continue to be optimistic.
Okay. So you have the last word, and you know why I have chosen to ask you the last. You are roughly about 1/5 of the banking system, 10 trillion plus your balance sheet. We have seen an explosion in NPAs and provisions. 4.62% your gross NPA, 40,000 odd crore. And of course provision has been going up. Yesterday you said that the worst is over, now we can look forward for better days, but it doesn't seem so. Could you tell us what went wrong?
So I think the way to look at the NPAs would be not at the gross numbers but at the net NPA numbers. So while the gross NPA is 4.6, we also hold provisions to the extent of 2.4, so the net NPA is 2.2. Now tomorrow, supposing I use the entire provisioning for write-off, then the gross NPA would drop to 2.2, so would the net NPA. But does the position change? No. And also we have to look to the quality of NPAs. If they have become NPA, are there underlying assets? Generally, I would compliment the regulators that in terms of their credit policy, they have always insisted on lending against security.
I just want to ask each of you, because Chanda, you raised a very valid point in the first leg when you said that some of the Indian corporations are over leveraged. Aditya said that sovereign is not over leveraged at all, but she said that some of the corporations are over leveraged. We know some of the instances. You have the vantage point sitting in your chair, Mr. Chaudhary, you and all. Can you give us a sense of how vulnerable are Indian corporations, and why do you see the pockets of problem in related to global turmoil? We'll start with you.
I think the overall leveraging levels in Indian companies are very moderate, about 1 to 1.5, at least for the top level companies. In fact, at times I have a feeling that Indian companies are being ultra conservative and conserving cash. If you just look at the companies in China, the way they are using the cash, and if you look at some of the public sector companies, they are sitting on a pile of cash which they could have invested out. So overall, if you aggregate the haves and the have-not, the average level of over leveraging would come to 1, 1.5, and given the asset cover they have, I think it's quite moderate, and I wish there were more leveraging.
You wish there were more leveraging,
Yes,
but you have provoked me to, I thought I would refrain from giving any instances, but there would be how many cases like say Kingfisher, where I don't want to talk about the numbers, but on the banks you restructure their assets, you also taken an equity exposure, which is 24% odd, less than 26%. 26% would have given you much more power to block special resolutions, so on and so forth. And the price at which you converted it's now 1/3. So how many Kingfishers are there in Indian corporate?
You tell me how many airlines are there in the world who are making money? You look at Swiss Air, look at this. So aviation is a tough business, but the Kingfisher has not melted away. Let us not take one company. Kingfisher has not.
Is there any other companies?
Pardon me?
In any other areas, any other companies in the power segment, anywhere?
Not particularly. Not. In fact, power segment is better than a service company because there are underlying assets. How much cash they are generating currently is another matter. But how many companies in India you have? Coal India, ONGC, Steel Authority is sitting over $4 to $10 billion of cash. So if you aggregate all that, where is the leverage?
Okay. I think if being a PSU banker, you can't afford to attack too much the private corporates. Puri.
No, I think you only picked up half of what I said. I said except the outliers, the Indian corporates are under-leveraged.
Who are the outliers?
No, that is banking secrecy. I don't have exposure to them.
Okay. So then you can talk, no? They are not your clients. If you don't have exposure to them, so you are not bound under any oath. You can
no, I don't give second-hand knowledge.
Okay. Okay. So can you talk about the stress sectors?
See, obviously when there's a global slowdown, anything that is dependent on exports would have some stress. We all know about the problems in the power sector, which are as much a question of logistics as much as the sector, because we will need power for the next 50 years as far as we can see. Demand supply, it's short. Have we screwed it up a bit? Yes. Will it sort it out? I think so. In the meantime, will it be restructured? Yes. So I'm not saying we don't have a problem, but I'm saying we don't have a magnified problem. You don't need to focus on our NPAs or the leverage of the outliers to the extent.
Agriculture?
Agriculture is going well. Textiles, to the extent that there is exports, had a problem even before the slowdown.
Mr. Chaudhary, agriculture?
Agriculture, to my mind, is a bit of an issue, but that is because of a moral hazard that was created in 2008 when there was a write-off of large-scale agriculture.
You spoke about, you're talking about the 70,000 crore
debt waiver scheme that came.
Okay.
But overall, Indian agriculture has been lucky that last 3 years there have been good rains. So it is a sector which is vulnerable. So agriculture lending, of course, would, and is not so much asset-based. But then I think it's more a return of credit culture than of the viability of the operations.
Stuart?
I think one needs to put it in context, and perhaps my biggest concern isn't leverage. My biggest concern is policy paralysis, and that I see as a bigger risk to some sectors than leverage.
So it's not over-leveraging of Indian corporations, but the policy paralysis. You're referring to Delhi, what's happening, right?
Well, Policy paralysis is a worry because it means that some of the structural issues in some areas will not get addressed.
Chandra, you need to close the loop because we started with you this entire talk about bad loans, over leverage or under leverage corporations, and the policy paralysis. What's your take?
No, the topic of bad loans actually started with you. But, yes, there are a certain set of corporates who in the current context are appearing higher leveraged. But in general,
would you like to talk about the segments?
No. So in fact, it's not even segment related. So in general, actually, the Indian corporate sector is very moderately leveraged. In the last 10 years or so, in fact, the corporate sector has actually worked towards decreasing leverage, and the large amount of cash flows and the access to capital markets actually allowed them to bring their leverage levels down. But why is it that certain corporates in the current context appear over-leveraged? I think we should look at the context. That's because in a growing economy, many of these corporates had made growth plans in line with a 9% growth rate and had estimated to implement projects and had actually expected that the cash flows from some projects will then go into financing or becoming the equity requirement for the next set of projects. Now, as maybe there is some slowdown in the growth, as there is for some companies some delay in project completion, some delay in final approvals, I think the rate of that cash flow generation is not as high, whereas some of the projects have been committed. At the same time, the equity market has not performed to the way it was expected. So I think it is a culmination of some of these factors that has actually, in a growth economy, led certain corporates to reach a position where their plans were moving as per a certain growth rate, whereas the actual growth rate is smaller. So I think it is in that context that some of the groups appear higher leveraged. But again, as I said, in a growth economy, over a period, these issues get worked out.
Tell us, it is a little gray area. Most of us do not know what exactly happening. There are a lot of stories we hear, what's happening overseas. Again, the impact of global meltdown. One we hear is this: because of new Basel norms, overseas banks are conserving money. They are not forthcoming to lend you or to renew your lines of credit. So there is a sort of dollar liquidity issue in those who are operating in overseas books. That's one point. And other related point is this: post-Lehman crisis, some of the regulators, like in UK, they are tweaking their rules. They are not allowing Indian banks, which used to raise money, their deposits, and use that money to give loans to other places. That's not been happening. And both these things are hurting Indian banks. And all of you have overseas operations, and Stuart and Pramit, they are global banks. Could you throw some light how, what's the exact situation? We'll start with you.
Now, as far as our overall overseas operations are concerned, what we have seen in the recent past is that there is plenty of opportunity if one would look at it from that perspective. See, one thing what has happened is maybe some of these high street banks would have started maybe going slow as far as the credit expansion is concerned, or cutting down on that, and therefore maybe for banks like us, we have seen it as an opportunity to expand our business.
And there is no problem on the liquidity front? Overseas banks are as forthcoming as they were used to?
Maybe for some point in time the spreads would have widened, but nevertheless I think liquidity has been reasonably good. No issues on that.
Tripuri?
Yeah, I think let's split your question into two.
Yes.
Is there enough liquidity available? The answer is short term, there's no issue on liquidity. The spreads are down to 150 basis points and going downwards. So this big figure that you talk about, India being exposed to the European bank crisis, is a bit of a herring. So short-term trade, no problem. Long-term loans which are not due, material adverse applies to the company and not to the bank, so he can't call it. So the only thing that is really vulnerable is two things. One is loans coming due and FCCBs, which is a small proportion. In any case, with the dynamics of the forward premium, and if you have to do it at a hedged basis, it's not attractive for you to go abroad.
So are there concerns, or?
The concerns for the European banks, yes.
For you.
No, enough for us now.
Ramit?
I think, whichever way you look at it, the problem that is taking place in the Eurozone is going to result in some amount of deleveraging. There's no question about that. I think the broader issue for us here in India is what is the impact of that and what is the magnitude of that impact. I think at this point, when you look at the extent of the Euro banks, the participation in either Indian trade finance to the banks, to Indian corporates, into these FCCBs, etc., I think the amounts in question and the maturities, let's say, over the next 1 or 2 years, are not necessarily throwing up any red flags at this point. So I don't think it's a grave situation. I do think, however, there is a case, not to be terribly sanguine about it. And I think as the rest of the world also lines up for liquidity in this deleveraging period, I think all Indian companies, banks, institutions alike that are going to require this liquidity would probably benefit by being ahead of the queue than by being behind the queue.
Stuart?
Yeah, well, certainly the deleveraging has occurred in Europe, mainly driven by the fact that there's capital issues for all the banks, and those capital requirements are going to become even greater as they move into the Basel III environment. One has to remember that the deleveraging, it's not just reducing loan assets, but it's also reducing risk assets as well. So you actually find that the amount of trading which European banks are undertaking has come down quite considerably from where it was 4 or 5 years ago. So it's not just the loan assets. What's the impact on India? Well, I guess last year we saw some of the impact when we saw a number of the European banks pulling back from the ECB market, as well as pulling back from the US dollar markets in Asia. So it both increased the cost of US dollar funding and also had an impact upon the availability of US dollar funding. I think in terms of our risk assessment here in India, we have to be conscious of the fact that Europe will be volatile and that events on there could have a knock-on effect. So one shouldn't be too complacent or too sanguine about the position. India has come through the turmoil quite well. It looks good today, but one needs to bear in mind that it is a risk factor going forward.
Thank you, Stuart. Yeah, please.
Just listening to some of the investor conferences of the large international banks, the return on equity in Europe and London is 9%. They are projecting to the overall world that they will give a 13% return on equity. That is implying that they will earn 15% outside of Europe and US. If they don't, they will not get any equity. So they will have to increase in the long term their business in Asia, otherwise they will not survive.
So you have done your homework well to always, to take us to a different track. You start reeling out Spain's debt to GDP ratio, and we are so better off.
But you said global turmoil. I'm putting a perspective to it.
And the question you just turned the table on me and said, no, it's a problem with the European banks, not us.
No, I'm just putting a perspective here.
Okay, fine.